This is a Bloomberg market. So we're coming into month end, massive month for equities. The bond market's in focus. Let's talk to Bill Baruch of Blue Line Futures, who joins us now out of Chicago. Bill, as I say, the S&P, massive month to the upside. S&P futures seeing a similar sort of story. What are you seeing in the charts as to kind of where we go from here and whether this move is overextended?
Huge move, and you know, I do believe it is a little overextended here, especially in the near term. I think we've seen a little bit of exhaustion, but big tech continues to lead the way, and we saw good earnings from Google earlier in the week, lay the groundwork. Facebook followed. But I think we're also seeing here a little bit of a paring back from these exhausted levels ahead of Apple and Amazon today. This puts the S&P at a critical level, and I got a chart for you guys. 2870. There's a number of technical indicators. I have two lines in that chart for you, 2870. But there's a number of indicators that also come into that area. If we get below there, you're going to see the selling snowball. So that's your support. That's your line in the sand for the S&P.
Bond market, what are you seeing in the 10-year?
I think there's been sort of the 50 basis points, which has become a psychological, almost a round number. The 1%, 2% treated almost the same way. We're getting the market's buoyed from that 50 basis points. I think we're setting up for one more leg lower, one more washout in the yields. On the trading side, in the futures, we use the prices. So we do think the prices are going to rise. Our trade alerts program actually got long in the 5-year Treasury yesterday. So we're looking at the shorter end of the curve as well, seeing lower rates, seeing new lows into those 5 years. We think another washout in the 10 years. We're also positioned long the 30-year bond prices. So we think across the board prices are going to rise, and that sort of correlates with a little exhaustion on the equity side. And if you break that level of support in the S&P, that's what's going to get those yields lower too. Prices on those treasuries higher.
Okay, final quick question. Obviously, again, massive month for crude, particularly at TI over in the United States. What is your sense of where we go from here, Bill?
Well, looking at the July contract right now, I mean, that's what everybody's focused on. $17 was a huge level of support long term. We double bottomed there, and now we've moved off back above $20 in that contract. I think we're going to see one more big wave of weakness sort of come when that June contract starts to expire. June's currently trading right at that sort of 17 area. So I'm expecting one more washout. I don't know how low it would go. I wouldn't be surprised to see June at $5. We've been negative crude for a while, but we will switch that bias, and we're going to get bulls up on crude oil probably middle or late